welcome to Ecoholics. We'll discuss in this video about one of the major or the hottest topic of Indian economy. So here we'll discuss about goods and services tax. So the topic of this video is GST, which was recently implemented on the 1st of July 2017. Now we'll discuss some background, some salient features of this GST. In this video we will also learn the structure of this new tax reforms in our country. That is why I started with the topic of the little bit of background. So first of all, we need to understand and make it clear how GST was initiated. So first of all, in the year 2004, that is 2004, there was a Kelkar task force set up in order to see the implementation of FRBM Act. So the Kelkar task force set up in order to get the recommendation of implementation of FRBM Act 2003. So here this is the FRBM Act. It means Fiscal Responsibility and Budget Management Act 2003. If you want to see this topic on some video, the link is provided into the description of this video. So FRBM Act 2003. Kelkar task force set up for the implementation of this FRBM Act. Now, but the Kelkar task force gave the recommendation that India should adopt the goods and services tax in order to unify the Indian market and in order to subsume all the indirect taxes. Here we consider about the difference between the Kelkar task force and the later recommendation. Here we talk about Kelkar task force gave recommendation that GST should be implemented. If the GST is one of the biggest tax reforms after independence, because there were so many taxes before the implementation of GST. According to our Honorable Finance Minister, there were around 17 taxes and 23 cesses were present in the Indian economy. So that is why this is one of the major tasks of this Kelkar task force in order to give recommendation how we implement GST. So he gave recommendation, or following these recommendation, government set up empowered committee. Government set up empowered committee in 2007 of state finance ministers. So this empowered committee carried the recommendation of Kelkar task force. So according to Kelkar task force, there are a number of recommendations. If GST will be implemented in the Indian economy according to Kelkar, this should create a unified market in India. It will reduce the cascading effect of many multiple taxes prevailing in the Indian economy. So here, in order to reduce the multiplicity of indirect taxes, Kelkar suggested that India should move on to the goods and services tax. So here we consider about the first thing. Now the second one, he recommended that in order to implement the GST, India's GDP will grow. So according to the estimates, that 2% of the GDP will grow if the GST is perfectly implemented. So we are all aware that GST is imperfect in this situation. So we can say that 1 to 1.5% increase in the GDP with the help of implementation of GST in the current situation. So again, the Kelkar task force said or recommended that in order to implement GST, we will be able to reduce our fiscal deficit, because the task force set up for FRBM Act, that is Fiscal Responsibility and Budget Management. So that is why he said that in order to reduce our fiscal deficit, we need to implement GST. Again he said that if GST will be implemented, it means the revenue deficit will be zero. Apart from this, the effect on the economy, it will increase the production, it will reduce the prices in the long run. So here we can say that in the short run, prices may go up, but in the long run, when the GST is smoothened or implemented successfully, so that is the transition phase, you can feel some inflation or price rise, but in the long run, you will get the reduced prices. The reason I'll let you know after few minutes when we discuss salient features. Another major point of Kelkar task force was gave increase in the production, output, employment. And that is why this is the major ripple effect on the Indian economy of the implementation of GST. So after that, we will discuss about the salient features, because empowered committee set up in 2007. So it's been 10 years since Empowered Committee set up, but we were unable to implement GST due to lack of consensus among the states. So first we'll see the salient feature. First one, indirect taxes subsumes. Here we need to understand what are the types of indirect taxes which subsumed under GST. There are taxes like a state level VAT, the central level VAT. Another thing is additional and special custom duty, service tax of the central government, many central cesses and surcharge. If we talk about state government taxes, like first one is VAT, another one is entry tax, octroi, entertainment, luxury tax, taxes on betting, gambling and lottery, etc. So these all taxes were subsumed into one, and this is known as GST. So this is the first salient feature. Second one, if we talk about, it is of a dual nature. So this need to understand, Indian government setup, it means the political setup of our country, India, that is very different from the other countries. India is a federal country. It means we have one union government and all the state government. So it means one union government and 29 other states. So that is why our GST, that is India's GST, will be of dual nature. It means the center will also impose CGST, that is known as CGST, and another one is SGST. So these are two types of dual nature. That is why we are saying two types of taxes: central goods and services tax and state goods and services tax. So this is very important because there are two assessee that will assess the tax structure. So that is why you have seen in the daily life or in restaurant, whenever the tax imposed, that GST on 18%, that is why in the bill you will find that 9% goes to CGST and 9% goes to SGST. So the revenue will go to CGST account, and the revenue for the state government will go to SGST account. Now we consider the third major feature. This third one, that is IGST. It is integrated goods and service tax. So it is imposed on the interstate supply of goods. Suppose one goods transferred from Delhi to Tamil Nadu. So that is why IGST will be imposed on that commodity. If we talk about IGST, previous to IGST, the central government imposed central sales tax at 2%. But IGST will be of only 1%. So that is the benefit, that is why the tax liability will be reduced. CST was at 2%, that is central sales tax. When the goods moves from state to state, central imposes sales tax. So that is why IGST is beneficial for the traders. If we talk about the next feature, that is but before that feature, we have to understand all these three in the collective part. Here we can say that the revenue or the assessee, it means the tax amount, who will control the assessee under GST. So here we can say that, here we are writing center and state. So if the tax amount, that is total turnover of the employee, so if it is below 1.5 crore rupees, the total annual turnover, the 90% revenue will go to state and 10% revenue will go to center. If the assessee is below 1.5 crore. In the second situation, it means over and above 1.5 crore, center and state will share 50-50%. So that's the most important thing. It means most of the assessee comes under 1.5 category, 1.5 crore category. So that is why the state government get the most of the revenue. Now another thing, when we consider this revenue part, there was one problem. There was a few goods exempted from that category of GST. That is why the alcohol and petroleum are not the part of GST. So I'm writing here on the top, that is the fifth point, exempted goods. So here we can say alcohol, another one is petroleum. Now the reason or the question that why we are not including these two things into GST. So there was a precondition of the state government that GST should exclude these two items, because these two items consist a major part of revenue for the state government. That is why the government excluded these two things, the precondition before implementation of GST. So that is why this is following the recommendation of the states. Another thing is compensation principle. So compensation principle, it means the states were scared about that they will lose the revenue after the implementation of GST. So that is why the GST Council, that is the apex authority of implementation of GST, made a compensation principle. So it means in order to loss of revenue of the state government, union government will compensate those states. So the compensation principle is a 5-year package. 5-year package. It means the base year for that is 2015 and 16. So base year means whatever the revenue earned in the year 2015-16, the base should be calculated from this. It means, for example, if we consider example, suppose the Madhya Pradesh earned 100 crore of revenue in that particular year 2015-16. Suppose next year after the implementation of GST, Madhya Pradesh collected the revenue of 90 crore rupees. It means when we compare to 2015 and 16, the next year Madhya Pradesh was on the deficit of 10 crore rupees. So that is why that 10 crores will be provided by the union government. So that's very simple. The base year, it means it is that year which the compensation principle will calculate the tax amount. So first one, it means here we are writing first year, second year, third year. Fourth year and fifth year. In the first year, it means 2015-16 was the base year. So the first year for that is 2016-17. But GST implemented after 17. So that is why the first year will be considered as 2017-18. So this is the first year. It means in case of loss of revenue on the first year, government will provide 100% compensation. 100% compensation for the first year. Second year means 2018-19. In the case of loss of revenue, the union government will provide 100% compensation to the state government. The next year 2019-20, again central government will provide 100% compensation. For the fourth year, that is 2020-21, union government will provide 75% of the total loss of revenue. It means, for example, in our example we have taken 100 crores for Madhya Pradesh. So in the first year, in the case of loss of revenue, whole 10 crore will be provided to Madhya Pradesh. Second year the same, third year also the same. But in the fourth year, if the loss of revenue is 10 crores, it means 7.5 crores will be provided by the union government to the state. And the last year, that is the fifth year, union government will provide 50% of the loss of revenue. So these are the simple things. After that, if the some amount will be left, it will be divided between the union and the states. So that is why, if for the compensation principle, if we left some amount after the fifth year, then this will be divided 50-50 between the center and the states. So 5 years package, compensation principle, that's done. Now the exemption. So below 20 lakh turnover, the assessee which has the 20 lakh turnover or below, they are exempted from the GST. And the same limit 10 lakh for northeastern states. So the 10 lakh limit was for a northeastern state, and 20 lakh limit in order to exempt from the GST was of normal India. It means except northeastern state. Now we talk about the GST Council. So the GST Council is an apex body, apex decision making body. It is headed by the Honorable Finance Minister. So Honorable Finance Minister is the head of the GST Council and consists of many state government or state government finance minister. So that is why GST Council will be the apex authority in order to decide the rates, everything. It means exemption list, rates, any modification, any new notice which is in circulation, or whatever the new declaration is related to GST. This GST Council is the apex body. Now we consider about the GST rates. Here GST rates decided into the 4 slabs. So 4 slabs, that is 5%, 12%, 18% and 28%. So these are the 4 slabs. According to some books or in newspaper, they were reporting that there are 5 slabs, but 0% is not a slab. 0% is a exemption list. It means we are putting those goods which will not attract a GST. So 5%, 12%, 18% and 28%. There are 2 major rates known as 12% and 18%. So most of the commodity comes under 12% and 18% category. 28% is for some luxury goods which government want to discourage their consumption. That is why, like a diesel vehicle, luxury diesel vehicle which is above 10 lakh rupees. Another 28% attracts like tobacco, alcohol, many other things, like not about alcohol but other things like for example the acidic materials of these type will attract 28%. So that is why tobacco, cigarettes, etc. 5% consider most of the common consumption commodity which consumes by the most of the people in our country. So India generally we consider that 5% is attracts a very below rate. So that is why for common people giving a relief 5% interest rate. Here we consider the 0%. 0% is the exemption list. It means this will not attract a GST. Here over and above 20% there is a cess. The state governments a lot of time oppose the cess, but central government said in order to compensate the state governments we need to impose cess. That is why recently on the luxury vehicle there will be a cess of a 15%. So that is why in order to compensate government is collecting cess over and above 28%. So these are the major recommendation of the GST Council, or the salient features of this GST which was implemented on the 1st July 2017. Now we consider the infrastructure for GST. So here infrastructure is fully consist of information technology. So this is known as GSTN. It was set up in 2013. The panel called Nandan Nilekani panel gave recommendation that the infrastructure should be based on IT. So here we can write the IT backbone, the panel GST, because we learn the lesson from the history of this India. 1986 when we introduced MODBAT, just a modified value added tax, we were not having that infrastructural backbone. That is why there were mass evasion of taxes occurred. So that is why in this situation, with the help of information technology, this GSTN portal was created with the recommendation of Nandan Nilekani panel. This GSTN network consists of 49% of government share. 49% of government share and 51% of share of private sector. Now what does it mean? It means Government wants to give this GSTN body as a private nature. In order to increase the efficiency and less government control, government gives this opportunity for the private sector in order to control this GSTN portal. Now 51% of private thing means it cannot be held by public sector banks. It means other than the government sector banks, banks can purchase this share. But individually they cannot purchase more than 10 to 11% share. So that is why, just to give a private character, government kept its share at below or at 49%. So this is the major thing about a GSTN network. It is fully backed by IT, so this is very important to check the evasion in the economy. That was one of the biggest goal of demonetization of November 2016. So after demonetization, government majorly shifted towards digital India. Oh, that's it for this video. We'll discuss in some other video, the next video of GST. We'll discuss about some problem, empirical evidences, the economy faced from the month of July to this end of this 2017. So we'll discuss in the separate video what are the problems are facing by the industrialist or any other person in filing the returns of the GST and etc. Again, thank you so much for your patience and have a nice day once again. If you have any doubt or any recommendation, feedback, you can mention in the comment box. Please give a thumbs up to this video and also subscribe and share this channel with your friends. Once again, thank you so much. Have a nice day.